Just to start off with, we'll talk about the good things on the buy side and the selling side. On the buy side, all of the economic indicators, all the pieces that we look for to make it a strong buyer's market are still there. Incomes are increasing, although maybe not as much as we'd like. They're still going up in the right direction, so is employment. Interest rates are stable. They're expected to rise a little bit, but incomes are as well, so we hope that most likely that'll be an offset for it. Inventories are rising in most areas and most price ranges, particularly more the upper end, but that's giving buyers more choice finally. They've been looking for that for a long time. In general, it's been a good overall opportunity for buyers. On the selling side, this is actually kind of an unusual market and has been for a couple of years, where it's been both a good market for sellers and buyers. Values are rising. Now that's good for buyers and sellers. It's creating equity, and two-thirds of sellers are also buyers as well. So it's creating that equity and creating that jump in the market. So value increases are great for sellers. The fact that interest rates are stable, keeping buyer interest there. Looking at buyer interest for the last few months, and really the trend's gone throughout the year, we're still seeing web activity, so people online looking at houses still rising. We're seeing showing appointments still very strong, and there's that seasonal adjustment, so this time of year it's a little bit slower, but compared to last year and last December and November and even October, we're still seeing good activity there. So buyers are out there. In fact, there are probably as many buyers in the market now as there were last year. In November activity, our pending sales, those new contracts that were written in November, actually were up rather dramatically across all price ranges in most all markets, which was very interesting. We think it probably was weather related to a certain degree, which means that if it is weather related, it's probably borrowing a little bit of transactions from going forward. But October slowed a little bit, and we think that was because we borrowed transactions in September and in August because of the talk about interest rate rises. So there's that flow of economic conversation going on that's causing buyers and sellers to move a little bit, maybe not as naturally as they would normally for the seasonality of the market. But all in all, even though you might be moving the pile a little bit between months, it's still very good activity and very good prospects going into the winter. If you look at this winter versus last, we'll have a little higher inventory with about as much buyer activity, That's a good, healthy market. As we said in the prior months, for particularly the upper end price ranges, it's going to feel a little bit slower for sellers because there are more listings. Even though there are more buyers, if there are more listings than buyers growing, then it's going to feel slower. And probably prices will not be rising as fast. One of the interesting things we looked at for Wayne, Oakland, Macomb, and Livingston, the Southeast Michigan four-county market, is we looked at sort of the strata of how activity is working between those homes in the market for 10 days, for 30 days, 90 days, and over 90 days. Because 80% of, plus almost 90% of all transactions are buyers purchasing homes that have been in the market 90 days or less. So you look at that and see how is that relating even within less than 90 days. And what's interesting is across all price ranges from under 150 to under 250 to under $500,000 to over $500,000, all those price ranges, the first 10 days on the market, there are about one buyer for every 2 listings. And that's consistent across the board. But as soon as you get listings older than that, the ratio changes dramatically. So those listings in the market up to 30 days, it's still about one buyer for every 3 listings across most all price ranges. The upper end, it gets 1 for every 8, but still within sort of a reasonable number. You go to more than 30 days, and you're one buyer for every 6 listings in the market. But when you get to the upper end, the $500,000 and above, it's 1 buyer for every 21. And then when you go to over 90 days, at the upper end, it's 1 buyer for every 30. So whereas in the lower price ranges, there's still 1 buyer for every 10 or so listings. So you can see that there's a dramatic change. And first of all, that doesn't matter what price range the property is in, the first 10 days, whether it's $100,000, $400,000, or $1 million, you're as likely to get an instant offer as a seller if it's priced right within the 10 days, regardless of price range. But as the home sits in the market longer and longer, the upper price ranges are going to feel quieter and quieter and quieter because just simply aren't that many buyers in those price ranges. And if they're all concentrating on the first few listings that hit the market, there's not many buyers left for the rest of the listings. So, so it does make sellers feel strange. You get a chunk that feel like this market is crazy, and you get another group that says there's nothing going on here because it's so quiet. So as we said last month, you probably can expect inventories to be, for the most part, slightly overpriced going into the winter. So, so sellers have to sort of reset their expectations. Not a major reset, dramatic reset, but just reset what they expect to see and happen and the values they expect to get. We think that this rise in inventory that we're seeing is not a long-term trend that will cause values to decline or flatten long-term. It's just part of the recovery. It's part of the fact that sellers are finally seeing equity and they're finally moving and doing the things they've been waiting to do for a number of years. So as I said before, 2/3 of those sellers are buyers, so they will absorb their own inventory for the most part once they get going. So that's the overall trend. Specifically for Western Wayne, Oakland, Macomb, the Southeast Michigan market, the trends, there's some interesting things going on. If we break the market up by price range, the 150, the 0 to 150,000, the 150 to 250, those are two lower price points where most of the activity goes on in Southeast Michigan. Those markets are following similar trends in terms of prices rising, in terms of a month's supply of inventory declining, so it's a little tighter supply there. And both in terms of pending sales, as we said before, pending sales have jumped quite a bit. The difference is that in the under 150, inventories have actually continued to decline and shrink a little bit. It's a tighter inventory, and the 150 to 250 inventories are rising. If you go above that to the middle market, the 250 to 500, the upper middle market, inventories are rising there quite a bit. Sales have also gone up in terms of new contracts written. Closed sales are actually flat there, but there's more activity going on, so it looks like we'll end the year with a little bit of flurry there. Month supply of inventory is still about 3 months, so it's in the buyer or the seller side of the equation still in the 250 to 500, but leaning a little bit more towards neutral. But still strong activity. And then the $500,000 above, sort of the luxury market, inventories have risen quite a bit. Sales are up as well, actually, but not that much. And the month supply of inventory is getting pretty close to a buyer's market there. We're getting over 10 months supply. And the month supply is always a little bit higher in the upper end because the market's so thin. But we're getting pretty high price, high level there. So at that price range, as we've said all year, you can expect values to be flat, in some cases even settling as those inventories get absorbed throughout here through next spring. So overall for Southeast Michigan, good activity, good prospects for what's going on in the marketplace, a little bit of adjustment for expectation for sellers, but still a really good activity.